Hi, and good morning. I'm Pete Najarian. This is the Take for Market Rebellion on this hump day. We got ourselves a Wednesday, and what a wild week we've already had. And you look at yesterday, well, there's a lot of different things going on. The markets indicated to be down a little bit. They were down about 275 points early on. We were down about 300 points for a chunk of the day. Then we started to get this nice move to the upside, and we watched the Dow start to get a little bit higher and a little bit higher, only to see it at the end of the day start to sell right back off again, finishing down about 160 points. Not nearly as volatile for the NASDAQ yesterday. The NASDAQ kind of sort of in a very tight range, as a matter of fact, finished off about 25 points to the downside, but it was mostly flatlining for the majority of the day. The big news really affecting the NASDAQ, Tesla and the entrance into the S&P 500, and that was certainly a storyline that everybody was talking about. It was pretty incredible. Matter of fact, the volume yesterday in Tesla was extraordinary. About 750,000 contracts in the first 90 minutes of the trading day on the option side, just to give you a little bit of an idea of just how crazy things were. Now we had volatility, certainly trading pretty interesting yesterday. We were 22s to the 24s. We've been kind of stair-stepping a little bit lower steadily as we've had a little bit more comfort in these markets as we've progressed through not only earnings season, but the last couple of Mondays with some announcements about vaccines and so forth. And we got a little something, a little surprise for you even today talking about some of that. But before we get there, so we had technology. There were some names that were working. There were different names that were not. It was why that it was much closer to flat most of the day versus what we were seeing in the Dow. But the weakness early on yesterday, really, Walgreens down about 9%, some really pretty big names. Baidu down about 4%. We had Marriott down a couple of percent. Boston Scientific down about 10% on a recall. So all kinds of different areas within the market. As a matter of fact, when you look across all of the sectors yesterday, a fairly rhythmic lockstep sort of a move together. And it really, we see that once in a while occur, but we usually see something stand out. The only thing that really did stand out yesterday, the most beaten up area yesterday, was the utilities, down a little bit more than 2% yesterday. So that's really what stood out. Now, early indications for today were for the market to be up about 175 points. That was in the pre-market. We haven't gotten close to that yet. Matter of fact, when we started the day, we were up about 80 points. Then we were up about 90 points. We started to slip. And now 1 hour into the trading session, we're up about 100 points right now. NASDAQ, on the other hand, there's still that little bit of a dislocation because we've got the NASDAQ actually in negative territory right now. So that's been something. I talked about vaccine news. Well, that was Pfizer today. More vaccine news. They're in conclusions of this phase 3 and 95% effective, all of that, very, very positive. But you can see the reaction from the markets gets a little bit less and a little bit less and a little bit less now as we're hearing more about these vaccines, which it's interesting, but maybe it's just because of the fact that maybe the markets have started to price in a fair amount of this. Obviously, going back to last week, week ago Monday, when we were up 1,700 points in the pre-market, that was extraordinary. Late in the day, we did sell off. We still finished up in a single day, 800 points. So a really impressive day. So earnings season continues to roll on. And I think the most interesting thing is we heard from some of the big box yesterday, obviously Home Depot, Walmart, some of those names. Target today, these Target numbers, I swear to you, I love Brian Cornell and what these guys do at Target. And I think they focused on the right thing. And I think so many people within the markets have not understood this story and probably still don't understand the story of Target. And why is it different from Amazon? Amazon is a monster. Walmart, it's a monster. Difference is Target, they actually have margins and they have extraordinary margins, and they have the growth that these others have, maybe even more so. So the earnings were a 279 on the earnings, expected to be 160. That's an absolute blowout. I mean, that's a number like I haven't seen in an extraordinary long period of time. The comps, same store sales up, they were at 20%. They were looking for about 12%. I mean, across the board. Take a look at Lowe's, some of those numbers as well, but was Lowe's maybe a little bit stretched? It might have been. You see that Target's actually moving 2.5%, 3% to the upside. Meanwhile, Lowe's was down about 5% last I looked to the downside. And maybe that's because so much of that was priced in. Great numbers, absolutely extraordinary numbers. Very similar to what we saw yesterday in Home Depot. Home Depot coming back a little bit today and starting to show a little bit of a lift after getting sold off yesterday. Something that you're looking for a lot of the time is those opportunities when they sell. And I didn't do it yesterday. I kept an eye on Walgreens, but That move to the downside because of Amazon. We talked about it here yesterday on the take. I think oftentimes people overreact to what's going on and when Amazon comes into their field. And I think this is another one of those examples. So I'm watching that really closely. I have not made a move yet. I will let you know when and if I do that. Apple, some news today as well. Not really market breaking type news or anything. So that's not really affecting the stock. Tesla got an upgrade today from Morgan Stanley and a price target. Price target went from 360 to 540. The warning I have for you right now, and I like Tesla for a long period of time. I'm one of the guys who followed right along with Gene Munster, who said, hey, look, it is not a car company. It's a tech company. I've agreed with him since the time he convinced me of that. He was right. And for years now, we've watched this stock move to the upside. Been an amazing move to the upside. The problem I have with this upgrade right now from Morgan Stanley, May of 2019, they had a worst case scenario for Tesla of $10 a share. So let's always try to keep in perspective. It's oftentimes why you hear me talk about this all the time. I care about the track record of who it is that we're talking about in terms of upgrades, downgrades, how they feel about stocks, what the price targets might be, on how much their accuracy has been in play for a very long period of time. Those are the people that I mostly trust. Those are the people that I look at. The others, it's great that they're there, but it's not something that interests me because they've been wrong for too long. And we see that all the time. Boeing news today. This Boeing news, 737 MAX, the possibilities of this thing getting back up into the air. Well, it's not just a possibility. It's going to happen. So nice big move today there. Industrials started to have a pretty decent move, but what really stood out for me today so far have been the financials. Now, we're not flying to the upside, and Boeing is a big chunk of this 87 points in the Dow to the upside, but keep an eye on the financials. JP Morgan's trading extremely well today. Citi, Wells Fargo, Capital One, PNC Financial. Keep an eye on these financials, these individual names. Now, this is going to be a little bit quicker today because now I'm going to jump to a little bit of unusual option activity for you guys. So as I do, I almost never like to give anybody or talk much about what we're seeing in ETFs because ETFs oftentimes aren't trades for me. This time is probably a little bit different, probably will be. But what we're seeing today is a really interesting buyer in the XLF. I just talked about the financials. They broke away from that 25 level. Now we're pushing towards 28 on the XLF, 2780. And we had a buyer of 13,700 of the December 31st. You got the entire month of December. So you basically got a month and a half right now for these options. They're the 30 strike. So a couple dollars away from where we are right now. They cost 15 cents up to 16 cents, a nice big chunk. Now we see bigger chunks oftentimes in these ETFs, but 13,000 still a decent sized trade. The 15 to 16 cents. It's not the most expensive trade in the world. There's no doubt about that. Oftentimes we see these monstrous trades in a BABA, in an Amazon, you pick your name. But in this particular ETF, we haven't seen something for a little while now. So I think it's pretty interesting. And that's why this one has really caught my eye. I'm going to take a quick look over here to my left. Check out any questions real quick. SLV, I see that. What will get Apple out of this trading range? It feels like it's stuck. Okay. I'm going to answer the Apple question first. What's going to get it out of this trading range? I think, quite honestly, we've gotten through a lot of different things for Apple. Apple made that big move way back, got up there at a pretty high, lofty level, then did get that sell-off, and here we are once again. That is why I think, and I've been a big proponent of selling calls against positions. Right now, the 125 calls against the $120 value, give or take, of where the price of Apple is right now. Usually going out a month or less because the premiums have been there. Now, I will warn you, implied volatilities have come down with this volatility index. Now, the VIX measures the S&P 500, okay? Now, the implied volatility is the volatility in that specific name. In this particular case, Apple. Those volatilities have come down extremely fast, and they've come down right there with the VIX. So I would say that you just have to be a little bit careful. You got to get enough premium to make it work, but that's something that I do on a very regular basis. Almost all, not all, almost all of my stock positions I cover with an upside call, usually anywhere from a 3 to 5 to 7% move to the upside. And I try to stay within a month somewhere in there. Sometimes you can't find that, which means either you're not going to sell or you find something else. Maybe it's 2 months out, whatever it might be. But that's sort of my take on Apple real quick. SLV, Pete mentioned huge positioning in that several weeks ago. Should I hold? We have continued. As a matter of fact, just the other day, we did see some SLV paper, some option paper in there. we haven't really seen the reaction from gold. We haven't really seen the reaction from SLV. I don't know whether or not this is tied in or not, but a lot of people, and matter of fact, I'm going back to a couple of round tables we've had. A lot of guys are talking about Bitcoin, and maybe as a possibility, at least, we are seeing a little bit. People refer to a lot of these various areas, obviously, as alternative investments, right? So whether that's silver, whether that's gold, whether that's Bitcoin, whether it's whatever, that oftentimes could be the case. So maybe the fact that we are seeing Bitcoin move to the upside as fast as we have, broke through that 17,500. I think Cal was telling me maybe we hit 18,000, something like that. I didn't see that, but some big moves, and we are seeing a pretty powerful move to the upside. We are hearing more and more positive commentary about this, so we'll see and continue to follow that. But it doesn't mean SLV can't work. It does not mean that at all. But I think sometimes exposure levels get kind of interesting, and I think certain names do stand out better than others. I might get to one last. How much more will GE run? Then I got to run. So GE, I'm not really sure, to tell you the truth. You know what? I was riding GE to the downside, and that was a great ride. Me and the matter of fact, this is a great example of what I was just talking about. JP Morgan analyst was talking about this stock in GE when the stock was still close to $30 a share or thereabouts. It went all the way down to $5 or $6 a share. He rode this whole thing down, and nobody else wanted to be there. And he had made that call. It was an amazing call. And we were seeing gigantic, I mean, massive option buying puts to the downside in GE for a long period of time. They were right on that entire slide to the downside. And maybe I might have outstayed my welcome, but that's okay, because I kept rolling and rolling and rolling. So I'm taking, when I say that, I'm taking off some of my risk. I'm taking off the dollar amounts that I'm getting and putting some of that dollar amount back into the next trade. That very last trade, I still hold some puts to the downside, and they are way down to the downside. I think they're maybe the 5 or the 6 puts to the downside right now. They're going to go out at zero, and that's okay. We had that ride all the way down. You have to be a big boy, big girl. You have to understand. And those rides, sometimes they're going to end. You know they're going to end. You just don't know exactly when. So GE, can it continue to the upside? Great CEO. We all know that. My biggest problem continues to be, will continue to be, the amount of leverage that they have put themselves in with the debt that they've got is still a big concern for me. So that's where I stand on GE. So I am not a player to the upside at this point in time. And yes, it could certainly continue to move to the upside. Folks, have a great day of trading. This is the Market Rebellion, and this is the take that we do live now each and every day at 9:30. We'll see you tomorrow.